Welcome friends to yet another video on analysis of microcaps. So today we are going to analyze a microcap company called Ahlada Engineering. There have been a lot of requests for the analysis of this company since almost a year on my channel, and I'm sorry to all those subscribers who have been requesting and have been delaying the analysis of this company. So we'll do a complete unbiased analysis, both fundamental as well as a bit of technical analysis about this company. We'll discuss the company's business model, we'll discuss the risks and rewards of investing in this company. We'll also talk about the valuation at the end. If you're new to the channel, please do subscribe and hit the bell icon. And if you are not a part of our Telegram channel yet, please do join as we discuss daily market analysis and lots of interesting news, views and analysis in my Telegram channel as well. One thing you should remember about microcap investing is only those investors whose risk profile is aggressive should invest in microcaps, and the allocation to microcap should be on the lower side when compared to the other mid caps and large caps, as these are highly volatile, and only if you are closely monitoring the results and other developments in these companies you should invest. Otherwise you should stay away from microcap investing. But at the same time, microcap investing can give your portfolio huge returns in the long term. So let's get started. Ahlada Engineering is into manufacturing of steel doors and windows and some other products related to the steel, like green chalk boards, dual desk, purified drinking water system. So they have two manufacturing units and one assembling unit in outskirts of Hyderabad. They have a capacity to manufacture 30,000 doors per month. They have 450,000 square feet plant capacity, more than 1200 employees working in their company, and up till now they have installed more than 6 lakh doors which are manufactured by them. Companies like Tata Group are their clients, so they have given job work to this company, and the company the Tata Group sells the doors manufactured by this company under their own brand name. Let's talk about the management of the company. The managing director of the company is Mr. Suresh Mohan Reddy, who has more than 10 years of experience in this industry, and he has done his bachelor's in engineering, mechanical engineering from University of Mysore. Briefly, let's discuss the history of the company. They started manufacturing SS, which is stainless steel furniture, in 2005, and they started manufacturing steel doors in 2008. They started manufacturing residential doors in 2012, which is just about 10 years before, and they started their windows in 2013. The agreement with Tata Steel was done in 2017, and Tata Steel was selling their doors by the brand name Tata Pravesh, and this company got listed on NSE Emerge platform in 2018. So this is a brief journey of this company, and as you see, it's just a recently listed company, listed 4 to 5 years ago. Let's talk about in detail about the business of the company. I would request you all to also observe the pictures on the screen so that you can easily understand the products which the company is manufacturing. So the first segment of the products which the company manufactures are the doors. So in doors, they manufacture mainly steel doors for residential as well as the commercial purposes. They have a capacity of 30,000 doors per month. Coming to the windows, they manufacture single rebate steel windows and double rebate steel windows. They are also into manufacturing of steel clean room equipment. This is used by various laboratories and other companies. So in this equipment, they manufacture the pass box, vertical airflow unit, air shower, biosafety cabinet, dispensing and sampling booth. So all these kind of equipments they manufacture for various industries. They also manufacture furniture which is used in clean rooms, like the SS cupboards, cabinets, cages and various other stuff. A lot of these products which you see on the screen, like the office table, the school benches, the chairs, recycled cabinets, all these products we see in our daily life when we go to any kind of hospitals or waiting areas. So all these products form a part of this company's product portfolio. The company has also diversified itself into manufacturing of water purifying systems which are made of the same material. So broadly, these are the range of products which the company manufactures. Now talking about the agreement with Tata Steel, which caught attention of all the investors, and most of the people got attracted towards this company because of this agreement with Tata Steel. So the company signed an MOU with Tata Steel in 2017 to manufacture and supply them steel doors, and Tata would sell their doors manufactured by this company under their own brand name, which is Tata Pravesh. This agreement was for 4 years, and that 4 years period and further extended period has also ended by now. And now the Tata Group continues to buy from them, but this is on order basis. So there's no fixed contract existing right now. So as an investor, you should not expect consistent revenue or any fixed amount of revenue from Tata Group for this company. In India presently, there is good growth in the real estate sector and is expected to grow at almost 30% year on year. The demand of doors and windows is going to be huge, and people are slowly shifting towards the steel doors and windows instead of the wooden doors and windows, because there are several advantages in terms of look and feel. Also, people are manufacturing the steel doors which give a look and feel of the wooden finish. The steel doors and windows are pest free. There are various initiatives by the government like housing for all or affordable housing. So these kind of initiatives are also generating tailwinds for the sector. The government is planned to invest more than 1 trillion rupees in the infrastructure sector in the next 5 years in India, and initiatives like the Atmanirbhar Bharat encourages these kind of companies to manufacture in India. So broadly you can understand that the infrastructure sector or the real estate sector from here onwards for the next few years has good speed of growth. Now, whenever you invest in any company, you have to closely see whether the company really has any competitive edge over the others. In microcap investing, not every time you find a strong economic moat, but still if there is one, it gives a lot of advantage of investing in any company even at the microcap stage. Coming to the competitive edge, this company although has acceptable quality of products because the products are purchased by the Tata Group, which signifies that the quality which manufactured by this company is up to the mark, but there are other competitors both in the organized as well as the unorganized segment giving stiff competition to this company, and hence the company doesn't have a strong competitive edge compared to the others. The company claims that their professional experience in this field, the quality of their products and the integrated manufacturing facilities which the company has gives them an edge over the competitors. Now, what is the growth outlook of the company going forward? They expect a decent growth in FY23, although the company's management, I have not seen them giving an outlook in terms of the numbers like the percentage of growth in the revenue and profits. They are expanding their distribution network to other states like Kerala, Karnataka, Tamil Nadu and Gujarat. They are looking at diversification of their product portfolio, and they are also looking at getting further repeat orders from their existing customers, like they have recently got orders from Andhra Pradesh government for their green chalk boards, dual desks and other products. Now, what is the risk of investing in this company? The fluctuation in terms of the raw material prices directly impacts the margins of this company as the raw material is stainless steel. There is a stiff competition between the company and the other few listed players as well as a lot of unlisted players. A lot of times the government keeps imposing import and export duties, so such kind of decisions by the government will directly impact the business of the company. Now, who are the competitors of the company? Among the listed companies, brands like Apollo Tricoat, which manufacture the steel doors under their brand Vondor, JSW, Avante and Tata Pravesh if they choose to manufacture on their own, and they also do the manufacturing in the other regions other than South India through other manufacturers. So these are the competitors of the company, and other than this, in the unorganized segment there are several other manufacturers of steel doors and windows. Now, after understanding the business, let's talk about the financials of the company. The revenue in the last 5 years has been more or less range bound. There is no steady growth in revenue which you can observe. They have done about 150 crores of revenue in FY22. EBITDA level also the growth doesn't look much. It's kind of a stagnant. They have done about 27 crores in FY22. EBITDA margin, in terms of margin, the margin is good. They are doing about 18 to 20% margin in the last couple of years. Profit after tax has not shown a steady growth. They have done a profit of about 5 crores in FY22. Profit after tax margins have been volatile, so we are unable to understand what is the sustainable margin at the net level for this company. Share capital in the last 4 years is the same at 13 crores. The reserves are steadily growing, although the company is not making much of profits, but there is a steady increase in the reserves. In terms of borrowings, the debt is under control. The company has a debt equity ratio of about 0.25. They have a debt of about 30 crore on their balance sheet as on FY22. In terms of trade payables, they have about 18 crores, which is in line with the revenue done by the company. So there are no red flags there. Fixed assets are about 19.4 crores. The inventory is about 37 crores. The inventory days is at about 165, which is very much on the higher side. Generally 2 to 3 months of inventory should be enough for this kind of companies. In terms of trade receivables, it is about 35 days, which is fair enough for this company. Debtor days presently are at 84 days compared to earlier. So if it further goes down to about 60, it would be better. Otherwise, more than 100 as earlier is slightly on the higher side. There's not much cash on the balance sheet of the company. In terms of cash flow, there have not been generating positive operating cash flow every year. In FY19 and 21, the operating cash flow has been negative. In terms of free cash flow also, the company has not been generating consistent amount of free cash flow. The reason also could be because the company has been doing capex. In terms of ROCE, the company hasn't been able to maintain the ROCE levels of 21-22%, which they used to do in FY18-19. This has further dropped to about just 7% in FY22, which is not good for the company. In terms of shareholding, the promoters hold about 50% in the company, and out of which nearly 25% is pledged. So this is again a red flag. And public holds about 41% in the company. The FIIs, DIIs hold about 7% and 1%. In terms of valuations, the market cap is around 150 crore, revenue is about 150 crore. So in terms of market cap to sales one time, it looks fairly priced, and EBITDA at 18% and ROC at 7%. So ROC ROE is slightly on the lower side. In terms of price to earning ratio, it's 60 times. This is high because at the net level the margins are very thin, and price to book ratio is about 1.2. So in terms of revenue, the valuations look reasonable, but profitability and the return ratios are on the lower side. So keeping those factors in mind, the valuations appear to be expensive. These valuations can only be justified if the company improves the margins and they are able to maintain the ROC ROE which they have been doing in the past, about 20%. So what we observe is that consistency in the performance of the company is lacking to justify the valuations. The stat auditors of the company are Messrs. Kishore and Venkat and Associates. ROE is about 4%, dividend yield is 1.19%, so it's a dividend paying company, and remuneration to directors is about 1.56 crores, which I found to be slightly on the higher side for this kind of company where the profits are less. When we look at the chart is kind of weak. They made a high of about 250 and further went down and took support around 75. So if somebody decides to invest in the company, either they have to consider 75 as their stop loss and take a chance to see whether the company improves and maintains its performance in the future, or the other way would be to monitor the results closely for the next 2 to 4 quarters, and when you see a steady increase and you see consistency in the results, then you can take a chance of investing in the company. So this is about Ahlada Engineering. I hope you like the analysis, which is unbiased, giving you both the positives and negatives. So let's summarize. In terms of opportunity, the company is into a good sector and the opportunity size is huge, but at the same time there will be competition. The quality of the products of the company are acceptable by brands like Tata. In terms of financials, I would say the financials are average. The margins at the EBITDA level are good, but the return ratios and net profit margins are not consistent. In terms of valuation, the revenue side valuations are okay, but profitability side valuations are on the higher side. In terms of antithesis points, there is huge competition from organized and unorganized players. The performance lacks consistency. The company is not giving specific guidance in terms of numbers, and if the execution of the company in the future fails, then the present valuations also may not be justified. In terms of margins, the company's margins are volatile as they are largely dependent on the price of the steel. So this is about Ahlada Engineering. Considering both the thesis and antithesis points, I'm sure you will be able to take the right call of investing in the company. If you want me to make more videos on your favorite companies, whether they may be microcap or small cap companies as well, please do comment the name of the company in the comments below. I will surely consider them for the upcoming videos. Thank you for watching and have a wonderful day.